Our financial position remained robust. We had net cash as at the end of December 24 of 6.1 billion, and we're declaring a dividend of 4.5 rands per share. The declaration of dividends is an important part of African rainbow minerals being globally competitive, and the declaration of dividends goes hand in hand with an important investment in the future. The headline earnings in ARM-Ferrous has decreased by 33% to 1.9 billion. In ARM Platinum, the headline earnings has also decreased significantly by 144% to 689. And we are always asked the question, what does the future of PGMs look like? And over the last few months, particularly what has happened in America, it is clear that the transition to a clean economy, a green economy that all of us are committed to, will take significantly longer than was anticipated. And we are confident that in the medium to long term, the pricing of our PGM minerals and metals will increase. And it's a business that we have confidence in. It's a part of our portfolio of assets that we run and operate that we think will continue to do well. And I often get asked questions by our shareholders about Bokoni. What we've said over the years, Bokoni is a world-class ore body. And we are confident that with some of the plans that we have and some of the strategies that we have in the medium to long term, it'll create value for shareholders. An important part is in the context of capital allocation, but equally more importantly, the context of the investment that we are busy with in Bokoni, and to ensure that every cent we spend there is appropriate and makes commercial sense, and is also part of the long-term strategy of realizing value when the prices of the commodities will increase, which we expect. Our investment in coal is one of the opportunities we've identified many years ago as being important to creating value for our shareholders. But also, we've got a huge commitment there as part of the just transition to a clean future and a green economy.
Just on the coal side, lower export volumes and strong exchange rate as a result of reduced tracking due to lower prices. I mean, we do have a cut-off price within which we decide when to track and when not to track. And during this period in question, we actually had to make a decision to stop tracking because the prices were lower than that limit price. Just going into Bokoni mine, it's a high-grade, high-quality ore body. We are in the production ramp-up. We've got two concentrator plants, the UG2 at 60 kiloton and the Merensky at 120. But over the period of time, we commissioned the UG2 because the focus was to basically focus on the UG2 horizon. So with that in operation, we need to mention that we still need into the future to ramp it up to the optimal side, significant capital injection. But at this point in time, taking into account the current price cycle where we are, we have basically made a decision that we're not going to basically proceed with a major capital growth. So what we are doing at this point in time, we're utilizing the 60 kiloton UG2 plant. We have focused on opening up the open pit. We've started really mining open pit in October and have ramped up to about 30,000 tons, which basically constitute about 50% of that capacity at high grade. We've stopped the mechanized development, which basically had a diluted grade because of waste and reef that was mined concurrently, and we're redeploying those efforts into focusing on available stoping and thus really increasing the feed grade into our concentrator. Pleasing to mention that we have seen some good grades reporting into the plant during the past month, and as a result also increased ounces. So the focus is basically making sure that we fill that plant with high-grade stuff, and that we continue to work tirelessly on reducing costs, and to that effect, we have really issued a Section 189 process to right-size the mine. So the consultation process is currently underway at Bokoni. So this plan that we have really put in place is expected to minimize cash losses in line with care and maintenance costs, at least care and maintenance costs, so that we can keep the mine operating and be able to really explore, other growth options when the price tends in the near future. The UG2 chrome recovery plant that we communicated previously, it's actually currently underway, and we will be commissioning that plant in June 2025.
In these challenging times, I think disciplined capital allocation is more important than ever. So at ARM, when we look at capital allocation, we prioritize investing in our existing business. And that's because it's the business that we know. These are our ore bodies. We know, the landscape very well. So in terms of risk, that's your lowest risk in terms of, where you can deploy capital. And when we speak about our existing business, we refer to the sustaining CAPEX, capital expenditure, or some people call it the stay-in-business capital. And that's where, in the period under review, we've deployed most of our capital.